Hello, everyone. Welcome to Options with Doug, streaming on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. Here are the key tenets to my approach for trading. This is the basis to my approach for trading. First of all, I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks that I follow and trade, the Mag 7 stocks, and also the equity index futures, the S&P 500 and Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and ES, the futures, that's a derivative of SPX. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index, and NQ is a derivative of NDX. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the reason I use positional analysis, I believe it's forward-looking. This is indicating how traders and market makers are positioned in the options market again. And let's say these levels that I'm going to talk about are moving higher. That indicates that traders are looking for, expecting, and positioning themselves in the options market for higher prices. And the second step on my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be talking about an underlying asset, and setups in that asset can be taken any number of ways. For example, in the S&P 500, setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. And I'll show some alternative trades in the S&P 500 today that are not ES futures. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. And hello, everyone else. Welcome. Glad you're here as well. Here's my agenda for today, Monday, April 29th. First of all, I want to go over news items, economic data and events and earnings. Nothing today, so for the rest of the week, and it is a week packed with data, events, and earnings. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, again, including some alternative trades. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. And hello, Sheena. Welcome. Glad you're here as well. All right, let's get started with news items. All right, so coming up for the rest of this week, starting tomorrow, this is the events calendar, and I'm going to look at the earnings chart in just a minute. This is on the Spotgamma homepage, and this is just a convenient spot to see the high impact data items for the week. First of all, tomorrow, consumer confidence at 10 a.m. Then on Wednesday, ISM manufacturing data at 10 a.m. And then the big event of the week, the FOMC meeting announcement and press conference at 2 p.m. and 2:30 p.m. Note the announcement will come in the middle of my session. I will cover the S&P 500 at that time. All right, so that's a big event for the week. And then on Friday, the jobs report and more ISM data. Jobs report 8:30 a.m. Eastern Time. ISM services PMI 10 a.m. Also Michigan consumer sentiment at 10 a.m. All right, let's take a look at the earnings chart. All right, so starting tomorrow after the market closes, both AMD and Amazon report earnings. That's after the market closes tomorrow. And then on Thursday, Coinbase, and Apple both report earnings. So those are stocks that I follow reporting earnings this week. All right, so that is the news events for the week. Now let's move on to positional analysis. I'm going to start with the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to step back, look at a higher time frame, and I'm going to go to the underlying index. That's SPX. I'm going to start with a one-day chart. This is Thinkorswim showing a one-day chart for SPX. 5-month rally began last year, October 30th. Then this correction began April 1st, and then SPX began reversing higher on the Monday after the Friday April expiration. So the April expiration was 419, and then this rally began the Monday after. Typical of a put-dominated market. All right, so let's take a look now at the upper end of that rally. I'm going to go to the SPX 1-hour chart. This is a 30-day 1-hour chart. There's the top of that 5-month rally. Beginning of the correction, April 1st. This red line here, it may be difficult to see, showing the April 19th expiration. Then the rally began the Monday after. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from last Friday. Those levels remain in place for the entire week. Then the dashed blue lines are showing the lower and upper daily expected move, also based on the options market, the closing price on Friday. I update those levels every day. So it looks like SPX is making its way up to the upper daily expected move today. All right, the dark red lines on this chart are Spotgamma levels. These are proprietary Spotgamma levels. They're based on gamma-weighted open interest. They're provided to Spotgamma subscribers on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. So first of all, 5,000. That is the put wall, the strike with the largest net negative gamma that can be expected to act as support. It did act as support last Thursday. That's also the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated. The next level up is the volatility trigger at 5,090. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. And just above that level is the call wall at 5100. That's a strike with the largest net positive gamma that can be expected to act as resistance. Not doing its job, SPX is trading above the call wall and the volatility trigger. All right, there were just minor shifts in levels for SPX. The volatility trigger shifted up from 5,055 on Friday to 5,090 today. So that was the only shift higher in the SPX. Let's wrap up our view of SPX with a 1-minute chart. And I'm going to zoom in on this just to focus on the levels today. Squeeze this just a little bit. So SPX trading in a very narrow range today, and we'll see what was acting as support when we take a look at Bookmap in just a minute. This level right here. Note again, SPX trading above the volatility trigger and the call wall. Gamma notional for SPX at the beginning of the day was just very slightly negative, and if this continues, most likely will shift to positive tomorrow. And note, upper daily expected move up above. If SPX can break out of this range. All right, let's go to Bookmap now. So in Bookmap, I have my own cloud notes. So I can show SPX levels. That's a level that was that 5125 noted as resistance. And the Spotgamma AM Founders note, also the 5115 noted as resistance. And the Spotgamma AM Founders note, those are SPX levels. I'm also showing SPY levels on this chart. Here's the SPY 509 large gamma 4 level that acted as support twice today. And note there is a difference in price between ES and SPX. And today that difference, that offset, is about 31 points. So I'm showing SPX 5115 at ES 5146. And no doubt I do post the index relationships that I'm using every day in Discord. It's a little bit late today. Sorry about that. Busy morning. A lot of things going on. All right, so this is the SP 500. The key for today, SP 500, SPX trading above the call wall, volatility trigger. And the SPY volatility trigger is at 508, so SPY is above its volatility trigger as well. Note the SPY call wall is up at 513. So according to that, the S&P 500 still has room to run up to the SPY 513 call wall. And shifts in levels for SPY, the absolute gamma strike did shift higher to 510. That's shown right here. And the just like SPX, the volatility trigger also shifted higher. All right, so that's the S&P 500. Kenobi asked, how are you calculating the daily and weekly expected moves? All right, so let's take a look at that. Get rid of these. Let's go to an options chain for SPX. All right, so let's just look at the expected move for tomorrow, April 30th. So what I will do at the close, so when options close, SPX options close at 4:15 p.m. Eastern Time, I'm going to look at this number right here. So if this was the closing price, if SPX was closed, I would take the closing price that would be shown here and add and subtract this number from the closing price to come up with a daily expected move. And you can do the same thing for the weekly expected move. So it's very simple. Just get that information from an options chain. All right, so that's how I calculate expected moves. All right, let's move on to Nasdaq. All right, I will tell you I'm having a problem with NQ for some reason. So I can't show NQ futures in Bookmap. It's kind of a puzzling issue, but it will display an error message. So I am going to look at QQQ today. All right, so this is QQQ. Unfortunately, again, I can't look at NQ. So we don't have the benefit of looking at the iceberg stops and liquidity for NQ, but we still have the QQQ levels, which are often key, were today. So the primary level in play for today, just like SPY, the SPY 509 level acted as support earlier today. For the S&P 500, the QQQ 431, that's the volatility trigger, acted as support earlier today. 433 resistance. All right, so those are the key levels. And then here's 432 acting as support. All right, shifts in levels for QQQ, all four key daily levels, the volatility trigger, put wall, call wall, and absolute gamma strike, all shifted higher from Friday, and that's very bullish. So definitely leading to a bullish thesis for the Nasdaq. Let's just take a quick look at NDX. Is anybody else having a problem with NQ today? If so, let me know. I didn't have time to post that question in Discord this morning, but maybe it's just me apparently. All right, so let's take a quick look at NDX. NDX above all these Spotgamma levels, call wall, volatility trigger down below, put wall above the call wall, and NDX trading at a very narrow range today. The only level above is 18,000. Hello, Caesar. Welcome. Glad you're here. All right, Sheena asks, are the blue and yellow levels on the 1-minute ES SPX chart still the daily, weekly levels calculated from the options expected move? So let's go to the, first of all, I assume you're asking about this chart right here. That is the SPX. That is the SPX 1-minute chart. So there are no yellow levels on this chart. And the dashed blue lines, blue line, that's the upper daily expected move. Purple lines on the 1-hour chart are the lower and upper weekly expected move. All right, so let's go back to Bookmap now. All right, so the yellow lines on this chart, these are just round number levels. That's just my convention. I use price lines to show these levels. These yellow levels are just round number levels. All right, let's go back to ES now. All right, let's wrap up our positional analysis by taking a quick look at gamma notional. We can take a look at it on this chart. It looks like Spotgamma has made a change to the user interface, so we'll have to get used to that. So this is gamma notional for the S&P 500 and Nasdaq at the beginning of the day. Note all these numbers are still negative, slightly negative for SPX. These numbers did shift higher from Friday to less negative. And SPX, gamma notional, if the move higher continues, will most likely shift to positive. All right, I'm going to skip over the Vanna model. Not much to see there. There's still today with a negative gamma, still a slight put Vanna tailwind for a move higher, but that should diminish tomorrow. All right, so my thesis for the day, somewhat neutral to slightly bullish for the S&P 500 based on the minor shifts higher in levels, and more bullish for the Nasdaq today based on the 4 levels shifting higher for QQQ. All right, so let's move on now to execution. And the first thing that I want to do is take a look at some alternative trades. All right, so I talked about this last week. This is the term structure for SPX. What it's showing is implied volatility by expiration date. So what I did on Friday, I showed a trade that took advantage of this difference in implied volatility, selling higher implied volatility, buying lower implied volatility. So this is this coming Friday, 5/3/503. That is the day of the jobs report as well as the ISM data. And then the 6th, that is Monday. So this is pretty typical of a Friday, Monday calendar. So it's a very short-term calendar, only Monday to Friday. So very small difference between the short and the long. All right, so let's go back. Let's take a look at Thinkorswim. Take a look at that trade. Now, this is a simulated trade. So I put this simulated trade on Thursday. It looks like actually on Friday afternoon, take this with a grain of salt because it's simulated. I could have closed this for about a 45% profit. So in taking into account some slippage, let's say a 35 to 40% profit. Earlier today, this profit and loss at the open was over $200. That's shown right here. All right, so let's take a look at another trade today. Let's go back to Bookmap first, and I'll show the reasoning for this trade. These are kind of alternative, more passive trades. This was again a trade, the short for this coming Friday and the long for the Monday after. So you would never hold this over Friday. In fact, again, the best approach was to take it off last Friday for a 40% profit, whatever. All right, so let's take a look today at Bookmap. So this is my thesis for this trade, looking at this level, acting as support. We'll take a look at Hero in just a minute to see what options traders were doing in that time. All right, so that was looking for this level to act as support. All right, so let's go back to Thinkorswim. And this is a vertical. a long call vertical. This is just a very narrow long call vertical. Buying, whoops, that is the, I'm looking at this right here. All right, so buying the 501 and selling the 510 call. All right, note there is a disadvantage to buying a call vertical, just like there's a disadvantage to any that the same would be. There would be also a disadvantage for selling a put vertical. You're going skew works against you. So in this case, you're buying higher volatility. This may be difficult to see. That's about well, it's jumping around quite a bit. Over 16% implied volatility, and selling lower implied volatility. So that occurs anytime you would sell a put spread or buy call spread. But the advantage of this is that all the SPX has to do is stay above 51.10 by the close to make a full profit on this trade. So we'll keep an eye on this. All right, so let's move on now. Let's see what options traders are doing today. So I'm going to go to Hero now. So everything that we've looked at so far, other than Bookmap and Thinkorswim, is based on static data. The levels, the levels on my charts, that's based on static data. Spotgamma takes open interest data. They apply their algorithms to those data. They take open interest data, apply their algorithms to that data to come up with the levels on the chart. All right, so now let's move on to execution. I'm going to look at real-time data now. So what this chart is showing is, let's move over to this chart first. This is the one that we're used to looking at. So what this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So this is the hero signal, hedging, impact, real-time options. And it is, again, showing options trades, market maker hedging activity for a combined signal for all these instruments. This is the hero signal again, HIRO, hedging, impact, real-time options. The white line is the chart for SPX, the price for SPX, and the purple line is the hero signal. And a rising hero signal indicates traders are taking positive delta positions. They are buying calls and or selling puts. A falling hero signal indicates they are buying puts and or selling calls. All right, so there is an alternative hero signal now for the S&P 500. And what this is an aggregate of all the S&P 500 underlying, so all 500 stocks. So essentially it is the Mag 7 plus 493. So typically this signal, it's only been out for a couple of days. It seems to be smoother than the total S&P 500, this signal here. This is what we're used to looking at. So let's just look at this. This looks like a pretty good signal today. So let's open this full screen. All right, Anurag asks, can you please tell what the trade was? What strike did you buy and what did you sell for SPX for the implied volatility trade? So that was a calendar trade. So what I did was, in a calendar trade, you want to sell the shorter dated, and that was the higher implied volatility on May 3rd, and then buy the lower implied volatility on the following Monday. And you could pick any strike you want. In that trade, I picked the at the money, which was 5,050, and also more speculative at 5,100. And both trades are profitable. So I was just showing the double calendar. All right, so let's move on to all right, so move on to S&P 500. First of all, again, this is the signal that we're always used to looking at. And just a few minutes after the cash open, before 9:35, the hero signal moved lower. Traders are taking negative delta positions, setting up a short. And then the long that I was talking about, the vertical, I was watching the hero signal shift higher again at 9:45. So a short, then a long. So let's go take a look at Bookmap. Let me zoom in on this. All right, so let's take a look at the clues in Bookmap. First of all, for the short, the volume dots in Bookmap are showing market buy minus sell. Green volume dots indicate more buyers than sellers. So this was really a stop run up. That's shown by the rising yellow line. Quick move higher. The initial hero signal was moving higher. That didn't last very long, just a couple minutes. Aggressive sellers starting to come in, shown by the magenta volume dots. Again, those are volume dots. Market buy minus sell. Magenta dots indicate more sellers than buyers. And magenta dots moving all the way down. The move down fueled by sell stop orders. Also shown by the on chart indicator. Also CVD, cumulative volume delta, shifts lower. And support right around this 509 level, a level that that I expected to act as support. Any Spotgamma level, I assume that it will act as support if tested from above. That's exactly what happened. S&P 500 makes a higher low. Note during this time, large traders were buying the move with iceberg orders. That's shown by the rising light blue line, also by the on-chart indicator. That's decent size, over 500 contracts, over 900 contracts. And price moves higher. Again, aggressive buyers coming in. And the S&P 500 moves higher. So quick move up, short, aggressive sellers, kind of a double bottom here, and price moves up. So let's go back to hero. So very strong correlation between the hero signal and price action today, confirming the short, then the long. Well, let's just take a quick look at this signal. And in this case today, this S&P 500 signal did provide more clarity for the long that I was talking about right around 9:45. All right, let's take a look at Nasdaq. And for the Nasdaq, I usually look at this Magnificent 7 signal. Let's just take a quick look at this Nasdaq, which also provided more clarity today. This is a combined signal, so let's take a look at what these two signals are showing. So first of all, this is just like the S&P 500 signal. This is a combined signal of options trades and market maker hedging activity in NDX and QQQ. Then the Mag 7 signal is showing options trades. Whoops. Options trades and market maker hedging activity for a combined signal of the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. All right, so let's move back. Let's take a look at this Nasdaq signal. Zoom in on this. All right, so just like the S&P 500, move lower at the open, right around 945. Hero signal shifts higher. And the Nasdaq moves higher. So again, we can't look at NQ, so we're going to have to look at QQQ. So the order flow is a little bit more difficult to read here. I would expect in Nasdaq to see very clear green volume dots on the way up, magenta on the way down, just like ES. So again, unfortunately, we can't look at that today, but the key is this support at the 431 volatility trigger as the hero signal shifted higher. All right, so let's move on. Let's take a look at some stocks. All right, so Sheena asked about Amazon. Sure, yeah, that's on my list today. And Anurag, you're welcome. I hope I answered your question. All right, so let's take a look at Amazon. Actually, Apple first. I think Apple was upgraded today. Note all the green volume dots, a lot of aggressive buyers today. Take Apple up to the 176 level. Note the liquidity in that level. This is at that level. This is very typical of stocks. This is the heat map in Bookmap showing a history of the limit orders. Typically for stocks, these orders come in at the cash open and they remain in place until they're filled. So it looks like they were filled there. Then absorption at this level. Maybe some orders filled, but not all. So that these sellers remain in the order book at 176. So a double top there in Apple after a quick move higher. Not really normal. This looks more like Meta or something like that, a much more volatile stock. Anyway, let's see what options traders are doing. So we'll go to Hero. And now we get more clarity. I'm going to separate out puts and calls. I'm going to have to jump back to avoid the auto zoom bug. All right, so what this is showing is call buyers coming in right at the open. That's shown by the rising orange line. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. This is one reason I really like to trade stocks. There's just so much more clarity in the hero signal now. Flow alerts indicate significant options activity, both coming in the first about 5 or 6 minutes. Quick move up, and as they're also selling puts, but really call buyers driving right around 10:10. Call buyers take their foot off the gas. Large block order buying puts. Then the put line flattens out and Apple consolidates and moves lower. This is a very typical pattern. So just like the vertical that I showed in SPX, another way to approach this is to either sell a call vertical or buy a put vertical when you see this leveling off. This is a very typical chart pattern. All right, so Katinga. with a move, Continue asked, how would you enter Apple? All right, so the first, if you wanted the long, you would have to know the news in advance, I think, and be sitting there watching Apple at the open. And in this case, if I was doing that, I would be buying shares rather than buying a call. That's just me. And then seeing this, let's go back to, so we know that traders really initially took their foot off the gas just right around 950. And then again, Apple made a double top right around 1010. All right, so the first way is to, if you like to buy a call. You'd have to be very fast. Or let's go back to Bookmap. You would have to anticipate this, be waiting on it, almost have an order in place. And another way to approach this, let's go to Thinkorswim now. All right, keeping an eye on our SPX trade. All right, so let's take a look at Apple now. So let's go to Apple. In this case, that was at 176. So a couple of ways to approach this. Let's just go for a narrow. All right, so we know the width of this is 2.5 points. So I would look to pay half of that. So I would, and that this very well could have been positive, been possible if you took this trade right at that double top. So width of this trade, 2.5 points. Spend about half of that. So another way to trade that. All right, so we'll just leave that up there. All right, so let's move on to all right, Sheena says, regarding Apple or any stock, usually the largest moves are right on the open, but it has the most risk and is not for the faint of heart, and it is also for the very fast and prepared. So if you were prepared, if you'd read the news, if you saw Apple moving higher. All right, so here's another clue. Apple was moving higher. So this data from DXFeed starts at 4 a.m. Apple trading higher in the pre-market above VWAP. So again, if you trade pre-market, a little bit easier, and if you trade only during the cash open, then you'd have to be prepared. Well, let's move on. Let's take a look at Amazon. All right. All right, excuse me. So just the reverse for Amazon. And note again, Amazon does report earnings tomorrow or after the close. So let's see what options traders are doing. Note the very negative order flow. Magenta dot opening print. Cumulative volume delta. Magenta for the day, negative. All right, let's see what options traders are doing. Let's go to Hero. Take a look at Amazon. So just the opposite of Apple. In Amazon, they were selling calls, shown by the falling orange line. Let's zoom in on this just a little bit more. This looks like a nice divergent short setup. So it looks like for Amazon, you had a little bit more time to take the short. You see the orange line making lower highs. Blue line, put line flat. Take a short. Flow alert comes in a few minutes later, confirming the move lower. And note your target is the 180 key gamma strike. That looks like where Amazon found support. So a quick move lower from right around 183 down to 180. All right, so it looks like Amazon did trade below 180, now trading above. So here's the 180 key gamma strike. Let's zoom in on this. Oops. All right, so definitely more time for the short setup here in Amazon. Amazon, we know that traders were selling calls, not doing much with puts. Test a VWAP here, and price moves lower. Clear target at 180, the key gamma strike. Also note all the liquidity at that level. Limit buy orders at that level, attracting price. Some did come in before the cash opened, and then more entered just after the cash opened. So a little bit more time to enter the short for Amazon. All right, Sheena asks, what is the flow point on the Amazon hero chart? Let's go take a look at that. So that's a flow alert. So that is, again, a hero flow alert indicating significant options activity. I use it as something to get my attention, and then I make a judgment based on the lines in the hero signal. So the flow alert gets my attention, and then I look at which way the lines are moving on the hero chart, hero signal. So again, significant options activity. These can often act as mean reverting signals, and I believe the basis for this is a significant shift from negative delta to positive delta, or vice versa. So on the S&P 500 especially, these often act as mean reverting signals. Let's take a look at another stock, coin. Zoom in on this. Zoom in on the morning. So note from right around 9:34, something like that, the hero signal moves lower. Coin moves below the put wall. So both the blue line and the orange line moving in the same direction. That's a very powerful directional indicator, setting up a short. And overall for the day, still setting up another short right around 11:15, something like that. So let's go take a look at Bookmap now. I'm going to zoom in on this. All right, so let's focus on actually this. All right, so what the signal is right here, this is the correlation tracker and Bookmap, and it's correlated to Bitcoin futures. That's what I have, BTC K4. So this is showing price correlation to Bitcoin, very strong correlation between Coinbase and Bitcoin. So traders were taking negative delta positions. Bitcoin moving lower, setting up the short, and this actually sets up a nice divergence long. Note right here, Bitcoin starts to move higher, and a few minutes later, Coinbase moves higher, setting up a long. Let's go back and actually let me zoom out now. All right, so this correlation kind of ends right around 10:30. Bitcoin levels off. And Coinbase starts to move lower. Let's go back to Hero. So it took a little while, but as traders started selling calls again and buying puts, but it looks like call sellers mainly driving Coinbase move lower. All right, let's take a look at Tesla. All right, Tesla was in the news. Elon Musk made a trip to China. I don't know if this was known in advance or not, but I think he got approval for the self-driving feature in China. Anyway, Tesla in the news, gapped up. Let me just check something real quick. All right, so far today, Tesla is up about 15%. And call buyers definitely driving price higher in Tesla, shown by the rising orange line. Flow alert comes in right at the cash open. Tesla breaches its 185 call wall, comes back and tests that level a couple times, then moves higher as traders resume buying calls. Very bullish day for Tesla, clearly driven by call buyers. Note, right around 12:30, call buyers take their foot off the gas. They start selling calls, also start buying puts again, and Tesla is now moving lower. Again, you could buy a put vertical here or sell a call vertical. Let's go take a look at Bookmap. Go to Tesla. All right, here's that 185 call wall. Acting as support, looks like a little bit slightly higher high. Best entry just at 10:30 there after that second test of the call wall at 185. Cumulative volume delta shifts sharply higher. Aggressive buyers coming in, shown by the magenta volume dots. Note the size of all these volume dots here. A lot of aggressive buyers on the way up. As traders are buying calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. And note also, again, this call wall breach. In a call wall breach, when that's where calls are concentrated. And for a stock, Spotgamma assumes that traders are long calls, market makers are short calls. As those calls go deeper in the money, as price increases, market makers' delta notional is becoming more negative, and they have to continue to buy stock to hedge their delta exposure. So that just adds fuel to the move higher with a call wall breach like that. All right, let's check on the S&P 500. If anyone has any stocks they want me to take a look at, please let me know. And let's go check. I'm going to go back to the total signal. Let's check both this S&P 500 equity signal. Currently moving lower. Let's check the S&P 500 signal. Also moving lower. All right, let's go check our vertical in Thinkorswim. We'll go to SPX. All right, so the SPX still barely above that 510 level, 5110. So very narrow range for the S&P 500 today. Maybe an iron condor would have been a better trade. All right, Anurag, if you're still around, here are the trades that I was talking about, that the simulated trades that I put on last Thursday. That was the 5100 calendar. That was the more speculative trade. Here's the 50-50 at the money. Sheena asked on Tesla, what was the call wall? The call wall was at 185. Acted as support earlier, and as Tesla trading above that level. All right, so this is the double calendar. Price moving around quite a bit, but still trading at a profit. Let's check the vertical again. All right, so it looks like SPX moving lower, down toward 5110. All right, Kenobi wants to take a look at SoFi. All right, so here's SoFi. All right, so it looks like SoFi, at least based on the open. Sorry about that. I'm gonna have to go back to SoFi again. So still down from the opening price. Traders are buying calls today. They're also selling puts. So there was some response to options trades earlier today. Down, then up, then consolidation. All right, Caesar asks, are you more of a time spread guy or single expiry spread or 50-50? My favorite trade, Caesar, my favorite trade, options trades, just a pure options trade or calendar spreads, the one that I showed that implied volatility. And when you look at this, looking at this term structure here in Spotgamma, selling high implied volatility, buying lower implied volatility, that gives you a significant edge, I think. So you can use this to your advantage. So the next one that we'll watch is this coming Friday and the following Monday. That difference in implied volatility is not as steep, but it should provide some edge. So as long as you get direction reasonably right, calendars are pretty forgiving trades, and they're pretty easy to make adjustments. All right, so this is where the edge comes in. If you can identify an expiration, a strike expiration with higher volatility and lower implied volatility, and structure your calendar spread that way, I think that provides significant edge. All right, Caesar wants to take a look at SMCI. Oops. All right, so bullish day in SMCI. Let's check. Does SMCI report earnings? Yeah, SMCI reports earnings. This looks like on Tuesday after the close. So let's go back. All right, so SMCI traders are selling puts and really started buying calls right around 12:30. So it looks like mainly put sellers driving price higher. But right now, both the put line and the call line are moving up in the same direction. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. Have a great afternoon. Remember, on Tuesday, consumer confidence, 10 a.m., AMD and Amazon report earnings after the close. Wednesday, 10 a.m., PMI data, and then the FOMC meeting announcement comes out 2 p.m. in the middle of my session. So we'll cover that on Wednesday. All right, everyone. Thanks again. Thanks for watching. Thanks for your questions and comments. And I will see you on Wednesday. Bye. Wow, big drop in the SPX.